Let's get some insight now from Rebecca Teltscher. She's a portfolio manager at Newhaven Asset Management. I'm not even going to ask you to react to that because I think we've learned that every day, not every day, every 10 minutes, we're getting an update on this stuff. So I'm just going to ask you, when you're getting questions from clients right now about what I'm supposed to do, what are those conversations like?
Good question.
Okay.
I mean, I think we're all tired. I think, I personally have a headache. Okay. I'm having trouble keeping up with the news cycle. What I keep telling our clients, just to take a deep breath. At the end of the day, all we're trying to do is invest in good quality, solid companies that are going to outlast, the current political landscape. It's going to outlast tariffs. If you focus on what consumers need versus wants, then you're really focusing on a niche part of the market that is more resilient than the broader market. And so we've always been focused on that, and it's actually been really interesting to see it come into play now. I mean, we're seeing a lot of volatility in the markets, but if you look at the sectors that we invest in, utilities, pipes, telcos, they've actually been performing really well in the past month. So it's a sign that, being defensive, while you lag in speculative up markets, you really show the stability in times like this. And I think that provides a lot of comfort to our clients.
And, for people who are trying to piece together which industries ultimately become most impacted, because even there's a lot of moving parts. As an example, like when we go from talking about the auto sector temporarily being provided some relief to now the idea of all the USMCA compliant industries possibly getting some relief. I believe the Commerce Secretary, Howard Lutnick, described it on television as more than 50% of the imports from Canada and Mexico being compliant with USMCA. But you still would, I guess you'd still have to sort of pull out the pen and, I don't know, get some spreadsheet and see which industries ultimately are impacted by that. Do you lean into that at all? Do you try to sort of figure out which industry might be a little bit more impacted or less impacted and let that influence your investing decisions?
Obviously, we are very aware of, how much cross-border trade is impacted by our portfolio. But for the large part, I mean, we've been pretty agnostic to tariffs. So if you think about our largest weighting, utilities, I mean, the utility companies that we own, they have operations in Canada, they have operations in the US, but there's no cross-border relationship. Like, they're rate regulated by the jurisdiction that they operate in. So they haven't been impacted. Our telcos are primarily Canadian, so they don't have any of that US exposure. And the ones that do have US exposure, I would like to think that they provide goods that are essential. And so while there could be, some short-term disruptions, I do think at the end of the day, supply-demand dynamics will take into effect and will work itself out.
Well, let me ask you this question, because we had a conversation earlier with economist David Rosenberg, who said all of this has, to a certain extent, woken up a sleeping Canada when it comes to trying to figure out how we're going to grow over the long term. And you mentioned the utilities exposure. Your firm has been a long-time investor in the pipelines. You guys have always talked about the things that we could be doing that we haven't been doing. And there are, outside of tariffs, these like decade-long trends that the market's been talking about, the AI boom, the energy needs associated with that, and the general energy transition. If Canada now is trying to have a united conversation around getting our long-term act together, is that like a fresh catalyst, do you think, for some of those utilities that you're looking at?
Absolutely. I mean, I'm glad you brought that up because, we've been invested in Canada for a long time. It hasn't been the most popular market to invest in with, all of the US technology and AI boom. But I think now, I mean, this might be a bit contrarian, but now I think is a really good time to be invested in Canada. And I'm not just saying this because of the national unity and and the patriotism that we're all feeling, but I actually think that if you look at valuations in Canada versus the US, like the discrepancy is very wide. I think there's a very good opportunity to get into Canada now at very reasonable multiples for certain sectors. I mean, if you think about Canada, on a broad basis, we have all the resources that we need. We have energy, we have fresh water, we have agriculture. If you think about catalysts in the short term, there's going to be an election. I believe no matter who the next candidate is going to be, it's going to be better than what we have now.
We've heard a lot of pro-growth talk for sure.
Absolutely.
Yeah.
So, I think, there is an opportunity right now, despite tariffs on a short-term basis. If you think about the tariffs that are introduced by Trump, it's going to have a direct impact, negative impact on Canada, with maybe a longer-term impact on the U.S. as, inflation rises and everything. But a lot of that's been priced into the Canadian valuations right now. So I do think that if we see a lot more volatility in the next few months, that's going to be a great buying opportunity to buy some good quality, stable Canadian names.
But the time frame would be what for that? You're making those investments for the long haul, I would imagine.
I think there's an opportunity right now. I could buy CNQ at an almost 6% dividend yield. I think that is a home run in the long term. I think even the pipes, while they've had a good move up recently, you're still getting, Enbridge at a 6% yield. You're still getting, some of the utilities at 5+% yield. So I think there's a good opportunity now. Even if things go lower from here, you're still collecting that dividend and you're still, compounding that over time. And I think there'll be an even greater opportunity to get into some of the more cyclical names if this continues and if we feel a little bit more pain from here. But I think there's an opportunity now for some of the more stable names.
All right, Rebecca, thanks a lot. Really appreciate it.
Thank you.
Rebecca Teltscher joining us, portfolio manager at Newhaven Asset Management. And we're also going to talk about some of the other areas of the market, technology and gaming, actually. There's been a lot of action in those